So what's up, guys? Welcome to today's session. We want to look at this pair, which is the cross pair, which is the GPPAUD. So in this particular pair, guys, we have something that I'm seeing here. Going to prepare to take maybe a long position in this case, but fundamentally, we're just going to look at the pound versus the Australian dollar here. Remember, for us to buy the pound GPP AUD mean we need a strong pound and a weak Australian dollar. So we need divergency, negative divergence in terms of strength of the pound and the Australian dollar fundamentally. So we need to look at which side is more crowded. Then we want to go on the other side, and on the same we do it on the Australian dollar. So let's start with the base currency here, which is the GPP. So we're going to look at the pound as a single currency. The pound as a single currency is called 6B, actually in an institutional chart here. So here we have the pound as a single currency, and we want to see retailers being crowded or the large speculators bearish, and then the commercials on the opposite side, then you can know that this pair is strong and is going to the upside. So let's bring out our tools here, and I'll start by looking at the COT report on a weekly time frame. Now, when I go on the COT report, what you're looking at, the upper line, this is the commercials, and these are the large speculators, or we can call them the fund managers here. Now, when you look at these fund managers are getting more bullish, commercials are getting more bullish, as you can see here, and here fund managers are on this other side, and it's easy to back test. I want you to see here, you see here when they were bullish, price took some time, then went up, and you can see the fund managers were getting more bearish. Look at this, commercials getting more bullish, fund managers getting more bearish, and we get the rally. We can see even here, look at this, fund managers getting more bullish here. Look at this, they are coming all the way from this low to this high, and these are the commercials. Then the fund managers were bearish because there are trend drivers and they have been pushing the bearish trend. And look at this, commercials getting more bullish, you get the rally. So it's easy to backtest once you understand how to interpret the information. Look at this, commercials getting more bullish like that, and commercials getting more bearish like this, you get the rally to the upside. So you can see I can point out these sharp big moves to the upside. As you can see here, commercials going, adding more longs, and then commercials getting more bearish. And you can see around this area, we get those rallies, as you can see. So it's easy to really track this information once you know how to read and interpret the information. So currently, we can see that commercials are bullish, as not that much bullish, but they are getting more bullish, as you can see here. And when you look at the index, right, we bring in the index because the index gives us the confirmation. For example, I'm looking at 3 years. I'm just using a look back of 3 years. You can see commercials, once they go above the green line, they're getting more bullish and they reflect here. So here, and here maybe you might wonder, what is this? These are the fund managers, the yellow line. These are the retailers, the non-reportable group, and these are the commercials. So commercials are getting more bullish. Look at them, 83% bullish. And if you look at this, they're at least not at historical high, but we have that divergence, and we're getting long in this one. Look at here, commercials getting more bullish here, and then commercials getting more bearish. And look on the index, commercials are very strong here, and that gave us a strong bullish market. If we come to this, if we look at this, see here, commercials were getting more bullish here. And on the index, we were almost bullish, getting more bullish. We can see that we have been coming all the way from the bearish, extremely bearish, all the way to this high. And we are almost just getting more bullish here. But if you look at this historical high, we're getting more bullish and the price went all the way to the upside. So guys, we can backtest this all the way as we want. We can look back so many times. You can see here, commercials getting more bullish on the index, getting more extremely bullish here. And we get that strong bullish market. So look at this. It's easy to see the pound getting more bullish in this case. The pound is getting more bullish in this case. And I'll say, look at the pound. Basically, this means that if you're holding GBP, USD, you can continue holding. Remember, for me and my team, we missed the buy. We wanted to trade on a daily time frame. Just put this one down. Wanted to trade the daily time frame. Allow me to remove these lines. This was just to show you how tools respond on the market. Okay, remove this. Where else do you have a line? I think we have another line somewhere. No, I think that was the only lines we had. So you see, we wanted to take our long position around this area, but this was like a weekly demand. We did not want to buy on the weekly demand, so we were more interested to buy at daily demand. So we happened to find our zone here. Who can remember? Those who have been following me for a while, just got to remember this was the demand, and look at that. That's like, that was the fresh demand there, of which I just wanted to incorporate this pivot as well. And this is where the entire zone was. Price never came to a zone and left, as you can see. But now we see the pound looking stronger in this case. And if we look at what we call the net position in this case, that's something that I can do another time. Let me just make this video as short as it could be. I could look at the net position as well, but let's just save on time. Sorry. So let us just save on time. So the pound is strong in this case. And if you look at the value, right? We look at the value. The value, that one is something that I don't have to talk about. So just we have the pound looking stronger in this case. This shows you what's happening here. Commercials, yeah. Look at the index. Sorry. Okay, even here, you see, commercials are getting more bullish here. This means that the pound is getting more stronger. It goes to the upside fundamentally. Now let's bring in the other currency, which is the quote currency in this case. And the quote currency in this case, it is the AUD, right? It's the AUD. AUD is called 6A here. And what we want to see what's happening on the 6A, we want to see where the largest speculators are crowding. Like, we want to look at where they are crowded, because we want to stay away from the crowded side and want to trade on the opposite side. So in this case, you look at this. This is now the AUD, and bring in, look at this. You look at the market, all right? Look at the market here. Look at this. Fund managers are extremely crowded, bullish. They're very bullish. Non-commercial, commercials are like hedgers are bearish, extremely bearish. Market is at what we call historical highs, as you can see. And this means that we are going to get a turn in Australian dollars. So this means that you prepare to sell AUD, USD as well. So here we are looking forward for, you see, now the fund managers hooking lower. This means that you're going to get a drop. And this, you can even back test. Look at this, for example, commercials getting more bearish like this, we're going to get a sell, all right? And the fund managers are on the other side. I can even back test with you. Look at this, commercials getting more bearish and commercials at historical highs. This is what you get here as well. Where else do we get the same? You can see here, commercials getting more bearish. can look at even here, commercials getting bearish. We can go back and look at this, commercials getting even more bearish here. And if I bring in the market, you're gonna see the market has to fall. Look at that, the price has to go lower. Okay, here you can see price has to go lower, price has to go lower. It's easy to backtest. Commercials getting more bearish, prices to get lower, and here they're bearish, prices to go lower. Now, if I bring in the index, look at this. Commercials are extremely bearish. Like these are the retailers and the fund managers crowded long. So we don't want to be on this side. We get high risk reward ratio. We want to avoid the crowded side. We want to go short on a bull market. So this is what we have here. So look at this, commercials getting bearish, fund managers and retailers getting more bullish, and we're looking for the drop. Look previously here, commercials are extremely bearish, fund managers and retailers bullish, and look at that, we're getting more bearish. Look at that, the drop came in. So it's easy to go back into this data and back test. Look at this, the last time again, commercials were bearish. Look at this, commercial. Here, they were not even extremely bearish, you see. On the index, we are not. So that's why we have to compare on the index and just look at the historical lows and highs. Here, commercials were bearish, but in the index, they were not. So price did not drop properly. So remove this one. But if you look at this, commercials extremely bearish on the index. Look at this, they're getting more bearish. Retailers and fund managers getting more bullish, extremely bullish, because they're following the trend. Price took some time. We see the index was still lower and it started doing what? Pushing down. And look at this case. This is the weekly time frame. Every candle represents 5 days. So of course the market took the longest time to drop. So in this case, we just refine this. We can see the AUD is weakening. The Australian dollar is falling. Commercials are extremely bearish. Fund managers and retailers extremely bullish. They are all crowded long. So this one gives us what? A bearish bias on the AUD. All right, a bearish bias on the AUD. And I actually did the video for AUD USD. If you want to check it out, you can do on my previous videos. So here, this means that now we have a bearish bias on the AUD and a bullish bias on the pound. So if that's what we have now, what do we do next? We are looking forward, all right? We are looking forward to buy GBP AUD. We're looking forward to buy GBP AUD. So if you're trading AUD USD again, I'll give you a sneak peek what we have. GBP AUD, this was the supply. Just very quick. The supply is here. You see, this is our supply, guys. And refresh my chart, price hits the supply, and you can see what's happening there. We got that shooting star, 2 shooting stars. So probably, who knows? Maybe on Monday, we get a strong bearish candle. Let's wait and see what happens. Meanwhile, let's proceed with our analysis. So we're going to check on GBP AUD. GBP AUD. All right, GBP AUD. So if I bring in the GBP AUD, you can see in recent days, GBP AUD has been falling because the pound, if you look at the pound, if you understand strength and weakness, the pound was weaker and the Australian dollar was very strong, so GBP AUD has to drop. Right now, the changes are happening. We're getting a flip in what you call institutional contracts, and the pound is now flipping long. Institutions are now getting long on the pound, and they are dumping the Australian dollar. So guys, this prepares you for another rally. So we go to the monthly time frame. Remember our idea here, the reason we want to buy the GBP AUD here is this. GBP AUD. For us to go long on the pound, we need fundamentally, not according to RSI or this short-term news, we need a strong pound, and again, we need the weak Australian dollar. If we get this, the pound strengthening against the Australian dollar, then this means that we get a rally. But also, if you get the weak pound and you get a strong Australian dollar, then on the chart we get a drop. So as for now, we have that divergence. The pound is strengthening against the Australian dollar, so we buy GBP AUD, right? To buy the GBP AUD. So let's go to the chart on a monthly time frame and look at this, guys. You can see the current trend on this particular market. This is, if you look at this, you can say we are within this low, and this is the high. We're inside the range. Those who used to use the fib, I don't use the fib, but you can see we're almost at the middle. But that's not even the proper way of look at this market. We can look at the overall trend of this particular market by starting from the 12-month time frame. If you look at the 12-month time frame, you can see we have been dropping heavily, and this look like a correctional phase. So in a 12-month chart, we can see we are at this order block. We are at this bearish order block here. This one is our departure, looking good. That's an order block you are looking at. If you go to 6 month, now 6 month, you can see price, once it gave us that massive drop, that started going up, rally, correction, internal rally, correction, and this is just another rally, probably a correction. Then we go up. That's a picture that I get to see on a 6-month time frame. If I drop on 3-month time frame, this is what I see, right? Drop and rally, correction back to this demand. Then this is the high that was created. So this is what we call the internal market structure, the rally, respecting the previous pivot. We get then the rally, we are back to this area, and you're likely to get the rally to take out this particular high. So if we go to the monthly, we drop to the monthly time frame. We dropped the monthly. You can see previously the monthly time frame after this low, this was the high that was created. So this is a high that we need to take out. So previously we are trading the internal market structure, what we call the rally, correction. Then you're looking for you see, we have taken out this high. So price inside here, it gave you pullback, then it went higher. So this is the high that it has taken out. So it's likely to come back around this pivot. You're looking for a continuation to the upside. So if we zoom in closely, we can see we are currently sitting on this particular demand. And it's not just a demand, it is what we call a pivot. Rally, correction, rally, you're likely to come back here and you continue going higher. Fundamentally, you are very bullish on the pound and bearish on the AUD. So combine AB like base plus what to get a bull bias in this case. So here, look at this, the weekly chart. You can see this is the strong low that initiated this entire move to the upside. So if this is what we're having here, then probably this will get our bias from this area. Let's pivot here. All right, you see this is a weekly demand. Now, on this weekly demand, there's a lot that is going on here. So allow me, honestly, guys, I like using what you call horizontal lines, but in this case, let's just use this one. So this is our demand. Price comes here, rallies comes back. So we want to refine this area to a daily time frame. So see, if you look at this market, previously I had shared in my community and everybody else, I said that you can buy from this demand. But now I'm kind of holding it back because I noticed that the pound is still a little bit pushing lower. So we are likely to see it breaking this demand. So to stay safe, I'll say, let's wait and refine this particular demand that was on weekly/daily. So you can buy from the basin of these candles here. So if we come here, say this market, because look at that, the refined version is not yet consumed, like the violation is less than 25%. So price can still come back around this area. And if you get here, the proper entry, this is how we're gonna do it. That here, like this, Stop loss 30% of the zone. Have to stay protected. Our stop goes below the pivot of the weekly/daily time frame. Okay. So the pivot goes down there. I kind of messed up with my, I did mess up with my, I messed up with my, how do you call it? My stuff, my mic. I hope I'm going to find myself sounding well. I don't know. So this way, put in our entry, our stop goes below the zone, 30%. I hope it's 30. Yeah, mark it again. Let me go back here. Entry, stop. Come on, let's do it again. There's our entry. Right, stop. And my stop loss is always 30%. Right there, I lock it. Then I'm gonna do this. Then we place in this like that. Call it set and forget and get a life. So guys, now we do go to the weekly time frame. Where do we look at? Our exit point could be around this area. Around this area. This is where we can do our exit. So target this area actually is a swing trade. So this is around 1,000 pips, 1,300 pips. So this is what I'm looking at. And guys, it's just about fundamentals. So let's see how the market's going to play this week. So in the current report, there's some few things that I can also share with you. We want to see as the GPP goes lower, we want to see on the pound as a single currency, we want to see institutions closing shorts and opening longs. And on the Australian dollar, we want to see them closing longs and opening shorts. So let's go and look at the tradingstar.com. Tradingstar.com. There's a website you can use to track this short-term behavior of the fund managers. So we want to see what the fund managers are doing in this case. So that's right, TradingStar. Right here, TradingStar. I'll have to TradingStar. Allow me to do something here. We are a little bit stuck. We are a little bit stuck somewhere. So I have to do this. Guys, hang on a little bit. So we proceed, and now you can see from this side. Let me show you. Just a second. Let's see what happened here. We're looking at the pound, and we want to see the pound closing shorts and opening longs as it approaches the demand. But here you can see they closed more longs, 10K, which is not looking good. Let's see on the previous report. On previous report, we want to see if they're closing. Here it's good. You see they closed both. Again, that's just something that happens. Now, on the other report, let me see the other report. Yeah, here we see the closed shorts and the open longs, which is very good. It's very good. Now let's look at the AUD. We want the AUD to close more shorts. I mean to close longs because we want to go short on it. So you want to see institutions closing more longs and opening shorts in this case. See what we have here. Now, you see AUD closed more 8,000 longs and also 2,000 shorts, but it's very good that they are reducing their long positions. That means that we are going to have what? We're going to have a drop on AUD. And if you look at the previous report, I want to see them closing longs. And as well here, you see here they closed 3,000. They opened 6K. Guess this enough. So drop your opinion. What do you think of fundamentals, way of approaching the market? And let's see how the market is going to behave on this particular currency. Otherwise, guys, have a great day, have a nice weekend, and we'll catch up on the next assessment.